Guys, welcome back to the Independent Investor Channel. My name is Ryan, coming right to you from the Big Apple, New York City, New York. So good to be with you. This is going to be a series that I start called Bullseye, and it's going to be a quick investing tip to throw out there with regard to some of the misconceptions about investing, and it's going to give me a platform to take and kind of give you my twist on some of these ideas that I hear way too often about investing, about what people think they know about investing. All right. So this bullseye tip number one is called investing is like gambling. Okay. And I hear this from all the time from new investors looking to get into the market. Well, I'm interested, but man, it's like gambling, and I don't want to lose. Okay, guys, I'm gonna try my best to dispel that notion. All right, and the way of thinking about it is quite simple. If you had $100 and you went into a casino and you decided to put all that money on black, all right, your odds of winning at the roulette table is just a little less than 50-50. All right, you're either going to win or you're going to lose. All right, if you happen to lose that $100, it's a catastrophic loss. All right, you're not getting that stuff back. All right, so one way of kind of thinking about it on the investing side is you're in control. Okay, you have the ability to start that right account. You are in control of the assets that you purchase within that account. It's not a game. Okay, you have the ability to choose the very best stocks for you and your family in your portfolios. Okay, so you're in control on the investing side of the house, where on the gambling, the house is always control. You know, you talk about the house always wins, all right? And in that particular example, all right, you went in there and it hit red and you just lost your $100. You're out that money. It's gone, okay? Now on the investing side of the house, losses is a figurative term, all right? And we always, when we start investing, looking at losses as you lost money. And I couldn't disagree more. Here's why. If you're young enough, your idea of investing should be to accumulate as many shares as you can of stock. All right. And I use the analogy all the time. If you need to take a piece of paper and cover the column that shows you the money amount in your account, then by all means do that, because quite frankly, it's irrelevant, guys. You're putting that into a program to compound over time, and you're looking to be as aggressive as you can on your share accumulation. All right. Now, over here, just like what I talked about, you have a catastrophic loss, right? When that ball hits red, all right, you're done. You're out. Whereas over here, a stock that you purchase and goes down doesn't mean that you've lost anything at all. And what I want to condition you guys to understand is that, and even I, when I buy a stock, very rarely does it go up the day after I buy it, okay? Most often than not, it goes down, which prompts your ability to strategically buy that, right, in chunks. Okay, maybe you put 50% of the total overall money that you want to buy that, let it go up, you're a winner. If it comes down, then you go ahead and purchase those shares at that particular time. But again, guys, you're in the driver's seat. You're the one that manages the loss, and any stock that we're willing to get into in the first place and make an investment, we have to be willing to take it into a downturn and justify buying more of it. All right. Now, the last thing over here, when I talk about the self-managed Roth IRA account, there is no tax over here. So investing, I'm saving you 100% of the total tax that would go into this particular account. Whereas over here, the house always wins. You either have a total loss, or if you end up winning too much, guys, all right, they're going to report you and you're going to have to pay a capital gains tax on the winnings. All right. So investing like gambling, guys, that's a notion that I want to dispel. It's certainly something that gets thrown at me all the time when I'm looking to give sound financial advice, guys. And quite frankly, it really doesn't have any place at all in the financial world whatsoever. It just doesn't have any place. And in my particular mind, it has no similarities whatsoever, guys. All right. So listen, thank you so much for tuning in. This is going to be a special that I keep coming out with. I'm going to call it Bullseye because honestly, that's the whole point, is to drive down on a specific point and look to dispel certain notions that are out there and misconceptions within the financial world. All right. Thank you so much for tuning in. Please subscribe to the channel, as you'll be notified of any future videos. Share this video with anybody out there that can benefit from the information. We're looking to empower one investor at a time, one viewer at a time. All right, guys, so hit the thumbs up button, please, and good luck in your financial future.